right, we are back with another edition of the Sunday Scary Stock Talk podcast. I am joined with Nathan Worden. Nathan, how you doing today?
Doing great. Thanks for having me. I'm excited to be here.
Awesome. So I think we got a big slate ahead, a lot of stuff to talk about, but let's take it back to the beginning. So tell me a little bit about yourself. Like, how did you get started in investing, and I guess how did you find it, and what's your relationship with it right now?
Yeah, so I started investing back in 2013. Basically, the overarching, life philosophy that I had back then led me to wanting to invest. I basically was a wedding photographer and also a resident advisor in college. And back at that time, I was living super frugally. Got kind of very into the fire kind of financially independent, retire early. There's lots of different critiques of that movement. But back at the time, I was very into that and living a frugal lifestyle, earning money, doing wedding photography, and just like not spending any of it. Housing was paid for because I was an RA. And so investing is something that I got into simply because of the situation that I was in, having extra funds and thinking about the long term and how that could create freedom. And then also the books and ideas I was exposed to, things like The Richest Man in Babylon, the ideas that kind of lead you towards understanding how the world works and money works, how capital begets capital, compound investment. Compounding returns is one of the most powerful things in the world. And so in 2013, that was like, I think a year before that was the year I graduated college. I'd started investing a little bit before that, but got into investing just simply because of life philosophy and because I was blessed with the ability to do so, and have been a steady dollar cost averager with specific bigger bets throughout the years. Currently, I am a community manager at Common Stock, and I'm very passionate about that space. Other kind of random things of note along the line, I got my MBA, graduated 2018. And so I'm just very interested in markets, human psychology, and the ways that the world is becoming a better place because people are entrepreneurs and trying to solve problems for other people, and how that can improve everyone's standard of living. And the innovation that we create for each other is something that generates returns, but also makes the world a better place. And so I'm very excited about investing for a lot of different reasons.
That's awesome. So that's great. Yeah, very drawn out and well thought out answer too. So let's get into common stock. So how did you find common stock, and how did you get this position as the community manager there?
Yeah, so I'm definitely a lifelong learner, and one thing I was doing in 2020 during the pandemic, or actually before that, leading into it, was a year-long boot camp learning software engineering. And one of the things that I wanted to do was build a platform that was kind of a social investing app. In my final project for that program, I built a stock scoreboard, just simply pulling down data and tracking returns, and was thinking like the bigger picture would be to add a social element to that. As I was building that, the API that I was using to pull down the data, it's IEX Cloud. They have a testimonial quote on their website from David McDonough from Common Stock saying, "Oh, IEX Cloud helps us build our social investing app." And I was like, "Wait, that's what I want to build. That sounds cool." So I Googled it, and every time I kind of go down a rabbit hole, I really click everything, try and find as much as I can about it. And the way that Google was indexing Common Stock's site was basically what happened was that the engineers had pushed the live version of the 2.0 Common Stock version like 10 minutes before I found it. So even David, the CEO, didn't know that it was live, and the engineers weren't even really aware that Google had indexed it in a way that public facing people could just click on it and find it. So I find Common Stock. I jump in. It's like a very bare bones site, but I like intuitively understand that right from the beginning that this is a cool way to connect people around stocks in the markets. And so I just started DMing people just immediately. I was like, "Oh, this is cool. I see a trade. So Grant, like, why did you trade Square?" And on the back end, everyone's like, "Is this a hacker? Like, who is this guy? Like, is this even live? Like, how can people even get into Common Stock at the moment?" And so they let me know later, like they were all just like trying to figure out who I was and like if I was a hacker. So they started answering my questions and they were like, "Hey, does anyone have a good thesis for Square?" Because they were just testing out stuff. They were just like, buying and selling Square, and one of them had sold Square, and I was like, "So why are you selling?" And he's like, "I don't know. I'm just testing the site. I don't actually have a thesis for it." But I mean, he didn't tell me that. They were just kind of like figuring out who I was. Essentially, the it was just like the right place, right time thing, and also right person because I knew exactly like the power of what they were trying to do. And because I saw that it was like such an early app, I started posting, every day for like 4, 5, 6 months. Just being a super user, welcoming new people in, kind of explaining to people like what this could be. And started making group chats for different themes and different investing strategies, and just being very, very active. And so eventually, after about 10 months of just doing that incredibly often, they reached out and said, like, "Hey, can you keep doing that full time?" And that is how I became a employee. I think number 17 at Common Stock.
That's awesome. Yeah. I think, everybody that's kind of interacted somewhat in FinTwit can kind of relate to see the, overarching need for maybe a little bit more long form because, whether you're on Reddit or other places, it doesn't seem like, there's a good place to kind of mix your ideas and go back and forth like that. So, did you have any experience on some of these other platforms? Maybe it's on financial Twitter or on some subreddits that you found useful, but not quite as useful as common stock. But kind of gave you that idea that all right, this is something that's definitely needed in the market.
Oh, totally. Yeah, because on its face, people would be like, "Well, why do we need a social investing app?" There's Reddit, there's financial Twitter, there's stock twits, there's Motley Fool, there's the Bogleheads. There's many financial communities on the internet, and there's lots of great discussion happening, or terrible discussion. But there, yeah. So my experience of a lot of those other places is like generally positive. Like you see a lot of good information that's being passed around, but there's so much negative information as well. So much like people trying to do pump and dumps, so much uh, a lack of transparency. And so the way that I kind of think about the social investing space and what is needed is that there's not enough information about the people giving their opinions. You don't know enough about the person giving you the thesis to understand whether or not you should be taking it seriously. And you can judge by someone's ideas whether they're being genuine or not, but it's a meta type of thinking that a lot of people don't do, not because they don't do it because they don't have time for it, essentially, right? Like they read a thesis and they take it at face value, and they don't take the extra step of thinking about, why is this person presenting this thesis to me? What kind of positions do they have in their portfolio that they might benefit from what they're trying to tell me? And there's tons of very obvious pump and dumps, and then there's tons of way less obvious pump and dumps where someone presents a very well thought out thesis, and the it's hard to understand where the insidious information is in like some big long Reddit post. So what common stock is by linking your brokerages to your profile and showing the verified positions that you have and the allocations that they have, you can know so much more about a person's skin in the game and their incentives when they're telling you their ideas. There's no other place on the internet where you can get so much information about the information source that you're getting. And I just think that that is the way the world will be in 10 years. Like right now, there's so much red tape and so many, disclosures that the financial industry has to do and regulations, right? So that it's not very well understood how important it is to know the positions of the person giving you the financial advice is. Like that is going to take a lot of time to take hold. But the way that I like the vision that I think that we're headed towards is in 10 years, if we're not aware of a financial planner's own incentives, like whoever's giving you advice, you will want to know how their portfolio is positioned so that you can understand whether or not they are incentivized to give you certain, advice or not. it's just going to be commonplace to have our portfolios out in the open. And if they're not, it would be very suspect. Like, what is this person trying to sell me, and why? I can't see what's going on. So it's going to be you're going to be expected to be extremely transparent in the future if you want to work in the financial industry where you're giving people advice or research. That's just, I think, what will happen. And the only question is like, how long will that take? And it could be quite a while, but I think that that's where we're moving.
Yeah. So what kind of hurdles do you see? Because I guess foresee with sharing all that kind of information, because generally speaking, I mean, at least from my parents' perspective, and maybe a little bit of the older generation, you don't really disclose your holdings or anything like that. But now it seems like it's a little bit more common with the content creators and everybody like that, kind of discussing and like you said, having more open source and open forums to discuss these ideas. I personally don't have my brokerage account linked to common stock. I've been mulling it over, and I think I probably will eventually. Um, but the one issue that I have right now is just like a security scare.
Mhm.
Whereas I don't want my brokerage account to get hacked or anything like that. So I kind of answered maybe one part of the question where I think like that might be an issue. But what other issues do you foresee, and how do you kind of get over the security issue or worry that some people may have?
Yeah, well, first off, I wanna say, like, it's a completely, like, understandable perspective to be like, "Hey, let me wait on this." I think a lot of people are just waiting for the Lindy effect, just how long can this go before, I see that no big bad things happen before I feel like I can trust this thing. It's just purely like, let me not be the very first person to try this because, like, new things can go wrong. But like, so the way that this whole kind of thing is getting developed, right? So Plaid is one of the big enablers of brokerage connections and information. So a lot of banks actually use Plaid as a secure way to connect to financial apps, and they're very good as far as security. Bank level encryption. The banks are using it. You hear all the time about rug pulls in the crypto space, right? You never hear about Plaid being hacked or not working. So like the and also common stock, it is using Plaid for some brokerages, but it's even more secure with direct connections. So I think that the security issue is one that's like the broad population will be somewhat slow to pick it up just because it's 2013 is when Plata was founded. So anything that's started in the last decade, there's going to be a significant portion of the population that's not going to be an early adopter. Just that's the way behavior works. And as more time goes on, and as no big issues occur, people are going to get more comfortable with it, and it's just going to be more widespread. So I guess I would just say that, look around at where you're hearing about data breaches and stuff, and it's really it's happening in other areas, but not in this like because if banks are trusting it, then how much do you trust your bank is kind of the way that I would put it. And if you're trusting money to put in your bank, then you're it's the same kind of thing to be linking up your brokerage account to Plaid or an app like Common Stock. But yeah, I don't I think that people who are worried about that now, I don't I think that that's a totally legitimate concern, and it's an okay thing, right? That like let someone else try it first. That's totally cool too.
Yeah, I mean, I'm glad you put it that way too, because you're definitely understanding of some of these concerns, and it'll just in the end make the product better and make you able to voice the ideas and maybe even the power behind why you should connect your brokerage and everything like that as well. Um, so that kind of leads me into my next question. So we've been kind of discussing common stock and the power of it, but how in this setting of an investing conversation do you think like being able to dictate both sides, kind of like common stock allows you to do, to have like an open forum where you're tracking trades and things like that, and you can even write a memo or essentially a thesis. So how do you I guess see that this whole discussion forum of investing is not only going to help investors, but help the passage of ideas back and forth?
Yeah, so I think that like when it comes to helping ideas pass back and forth, it is so important to have forums where that is encouraged, right? And so there's already tons of forums where that's encouraged. But the thing that I'm excited about is the culture of valuing collaborative disagreement and constructive discussion is something that doesn't really exist in other places. So when you say like both sides of the market, like markets can be very zero sum because a trade happens and usually one person is right and one person is wrong. You can look at it differently. Like both people can win if something keeps going up and then they both sell and they get positive returns. But at the moment where you trade, going forward, one person is probably going to be right and one person is wrong. So it's very adversarial and it's very zero sum. However, I think that when it comes to discussing these ideas and understanding the person who's on the opposite side of the trade as you, there's a lot you can learn the most from the person who sees the diametrically opposite viewpoint as you, right? And if you are incentivized to see that person on the other side of the trade as an adversary, then you're turned off to understanding why they're taking that opposite viewpoint. And you don't need to necessarily to like come to a point where you agree with them because then you'd be making the opposite decision. But you should understand them. You should understand why they're taking the opposite viewpoint as you. And that makes you a better investor. It helps you understand what moves to make next. And what I think is that most investing platforms out there right now, they harness that zero sum energy and they turn things into tribal nature and they suck out the engagement from these arguments that can happen, and they do that because it's engagement and anger and arguments. They get a certain type of engagement, they get this energy and this tracking, but it's also ultimately bad for the investing conversation in general because it incentivizes you to see the disagreement as a threat and to turn off the understanding reminder that like I want to be friends with the person who has a different perspective than me, because ultimately again if I understand their position it makes me stronger. So I think that what needs to happen is a social platform like Common Stock. What we're building is the culture where collaborative disagreement is encouraged and it's seen as a strength and not a weakness and a threat. I don't think people understand how valuable that is. I think that that's such a better way to be introduced to investing, and it doesn't exist in other places because other platforms haven't thought critically about how important that is. They see the results and the engagement of creating arguments, and they say, "Let's do more of that. Let's pit people against each other." And what we really want to see is have people get better returns than they could have otherwise. And I think the way to do that is by incentivizing people to see their blind spots and see their opposite traders as someone they can learn from and not fight with.
Yeah, I agree 100%. One of the things that I try to do before I get into an investment is always look at the bearish argument for any stock that I look into, just to see if there's something that I'm missing. And generally, before I kind of got into the weeds of common stock and maybe even FinTwit, because to be honest, I kind of just discovered this whole realm of Twitter and social media and just about maybe a year and a half ago. So relatively new. But I would always look at just Google like arguments and just look at, whatever square block bearish thesis, Apple bearish thesis, just to see what some of these critics are saying. And sometimes they have some biases or some sways, and you don't necessarily know their background as well. As kind of like you're saying with common stock. So yeah, I mean, I definitely think that there's a place for it for common stock and open forum discussion and agreements, disagreements, as well as agreements, when it comes to all kinds of investments. Because like you said, the open forum sharing of ideas is definitely very powerful. So it seems like you guys are experiencing a lot of growth recently as well. So it seems like more people are kind of coming into that idea and seeing the value in that.
Yeah, it's yeah. I mean, I hope that that is the case, that people are realizing that there's a better way to have a discussion, and that's kind of what's drawing them in. I see examples every day where on Twitter, someone will ask a legitimate question, like they're just trying to understand the opposite thesis, just like you said, like looking for the bear argument. But it's interpreted, that question is interpreted as a threat, right? The person who said, I think that this stock is this, and the legitimate question is like, well, but what about this part of their balance sheet, or what have you? And the response is like, well, you don't get it, like I shouldn't, there's no point in engaging with you because you'll never see the purpose, or it's just they're ships passing in the night that don't connect, and nothing good happens. Well, one thing that I've seen, which is so cool, is the same people acting on Twitter having a conversation about the same thing. And then I see those same people coming over to Common Stock, and like a lot of the people in Common Stock I know. And so there's certain nudges that as a community manager, I'll be like, hey, why don't we try this conversation again? And the same people having the same conversation about the same company in one context on Twitter, they end up having a different discussion on common stock, simply because the culture and the setup and the assumption of the conversation is one where like, hey, let's try and learn, versus, ooh, I think this person might be trying to threaten me, or like the intent, the positive intent is not there on Twitter, and it is on common stock, and that can change the discussion for the better.
Yeah, I definitely think the one negative of Twitter, it's somewhat of a positive too, but the character limit, the power, I think, between common stock is that you kind of have the option for both. So on the topic of investing discussions, you run the market game, which I'm actually going to be participating in on, I believe it's May 13th or
Mhm.
whatever that Friday is, the second Friday in May. So yeah, you run that game. So how did you get the idea, and what are your thoughts overall and experience on running the market game? And I guess tell the listeners who don't know what exactly that is.
Totally. Yeah. So the market game is a tournament style investing competition where six investors have 3 minutes each to give a quick investment pitch, and then ask each other tough questions about why their investment thesis is better than other people's. And then the audience, and this is done live on Zoom, and then the audience votes for the best pitch of the night. We've got two teams of three. Each team of three gives their 3 minute pitch, and they do the Q&A, and then they vote, and then two winners of each of those brackets then have one final vote to determine a winner of the night. So it's this tournament bracket style setup for an investing competition. The reason why I set it up and why I think it's important and fun and cool is I do think that, like there's so many things. So one of them is I like investing discussion face to face. I think a lot of times if you are on Twitter and you're going back and forth, you lose the humanity, you lose the understanding of who is on the other side talking. And so by meeting in one spot and talking face to face over Zoom, like you get a lot more context. And again, it goes back to the whole thing of like knowing about the person who's speaking. I think that that's very valuable. So there's that. The competitive aspect is just kind of for fun, right? Like I'm a competitive person and I want to win and do well, and so there's that. But it's really not about the winning. It's about the feedback, right? Competition is fun because there's so much feedback. When you go and you play a sport and you see the score, you can improve because there's metrics and measurements that tell you how you did. And so the competition aspect and the voting of which is the best thesis is more about like, how am I resonating with the audience? Like, what am I saying that people are latching onto that they're voting for, and then I can also see a competitor what they're saying and why are they voting for them. That helps you understand market psychology, right? Like at the end of the day, it's humans that are investing their money into investment theses, and like you have to understand what other people think in order to glean a proper thesis and understand like where the markets might be going. And so it's this microcosm of that same thing where no investment is done in an isolation. You're also deciding like if I like this thesis, what is it, how much do I like it compared to other theses? And the market game allows for, you know, six ideas to be presented at once, and you can kind of compare and contrast, and then you have to pick one. And so it's kind of like the market, like the actual stock market, but in a smaller sense, so that you can kind of understand like here's all these different options. Which one do I like? The voting is like people buying stocks, and you know, there's a winner crowned, but it's this fun way to meet other people, hear six ideas at the same time, ask your questions, and yeah, you know, learn a lot about investing in the process.
Yeah, that's great. And I think, everybody enjoys a little bit of competition too. And, once you get out of the school setting, it's either, just competitive where trying to move up in work or what, or, just trying to be right against the market. Whereas here, like you said, it's a little bit more of a discussion and you're competing against other people, which, everybody enjoys every now and then, I'm sure. But yeah, I think it's great. I think it's just kind of continues the trend of what Common Stock's all about, just sharing ideas and having that open forum discussion, which I think like we've been hammering home, it's extremely powerful.
Hmm.
So now let's get into some of your personal investing ideas and personal, I guess, investing theses. So, are there any specific trends that you're looking at as far as investing goes? Like what kind of industries and maybe companies or things like that you're looking into as of late?
Yeah, it's a great question. So the first thing that I'd bring up is the energy trend, and specifically the Canadian oil mafia. So I want to give a shout out to them specifically because I think that so the Canadian oil mafia is this group on Twitter that holds these regular Twitter spaces talking about energy, and specifically usually Canadian oil companies, but oil in general, and energy in general. And so in the last year, energy has done very well. Tech has done very poorly. And I think that the reason why I'm interested in this trend is I would say that, you know, for a lot of my, you know, early looking into like climate change and the way that technology is advancing in solar, my stance would have been, hey, we really need to get off of oil. We need to really move to a world where we're using sustainable energy. And I still totally believe that, right? Like I think we need to take care of the environment. We need to be very careful about the ways that we use energy and what that's doing to our environment. The Canadian oil mafia makes the point, though, that if you look at the ways that we can transition to sustainable energy sources, oil and non-renewable energy sources are going to enable that transition. And there, like, and I don't really want to get into the whole argument of do we need to go cold turkey? Like, is it too late? You know, there's so much research about, you know, how catastrophic a 4 degree increase in temperature and global temperatures would be catastrophic for the human race. 3 degree increase, still incredibly terrible. Two, the world is changed and but like, you know, survivable. And I think we're headed there now. And one, I think we're already at, and you already see some changes how, you know, coastal populations are going to need to move elsewhere. There's going to be huge changes, right? So the argument about like, do we really need to go cold turkey and just use no oil? Is that what we need to do right now? I'm not an expert enough to say if that's the case, and I know that that is a uh, an argument that some would make. But the thing is that if we do try and make this transition without oil, it will probably take longer because of how efficient oil is at creating, energy and solar panels. And even if you move to a sustainable future where you're using electric cars, it's just not very realistic to say that like oil will not be part of that at all. And so we're looking at these big hairy problems. And they're very political and they're very socially and emotionally charged. And I think a lot of the energy in the Canadian oil mafia is actually partly because for a whole decade they've just been really shut out, right? Like there's so much investment that's gone into solar and renewable energy sources, and oil projects have just been left by the wayside. And people who work in the oil industry are like, hey, come on, like there's no respect here for me, and I'm trying to help solve the problem. And so as oil has these massive returns over the last year, it's kind of validation. It's like, you know, it, it's kind of like, I told you so. Like you're gonna need us to do this transition. And so I think that like again, I'm all about like bringing, understanding the humanity of both sides. I think when we villainize the opposite side, we can't get anything done. And again, I see on Twitter where a lot of these exchanges are not productive. And I really want to humanize both the side that thinks that oil is the right way to go, and the side that's like cold turkey, let's get it off. I think we need to understand where both are coming from and to figure out uh, what can be done where we're moving to a sustainable future that makes sense for the world. That's a little bit idealist. That's not an expert on either side, but I do think that conversation is an important one. And when it comes to investing and these trends, I do think that energy is going to be such an important piece, that investing in energy companies and having that be somewhat of a position in your portfolio is going to be probably a pretty good call. So I am looking pretty closely at both Canadian and American oil companies as part of my portfolio, and still doing research in that area.
Yeah, that's great. And I mean, I agree with you. I think it's, definitely a hot button topic right now, to say the least, especially with, the way the trends of, the way oil and gas is going up in the United States, and other things like that as well. But yeah, I mean, it seems like, it'll be difficult to go cold turkey, but it's kind of interesting that although you're looking at this industry, it's kind of like how you look at, almost everything. Is like you need to understand both sides, and that's how you can kind of make your own logical decision, and make your own thoughts on the industry as a whole. And it seems like at least from what I know, it seems like it's been doing pretty well for you, at least as of late. So that's awesome to hear. And yeah, maybe the trend will continue, and I hope for your portfolio's sake that it does as well. So, are there any other industries that you're kind of getting into, or maybe just, I guess, some overall trends that you're looking at, whether it's, I guess, just human behavior or anything like that?
Yeah, so and I know you'll like this, but I like the blockchain space, Bitcoin and Ethereum. I actually wanted to kind of ask you. I don't think we've had conversations about, your most interesting areas, but right now I am quite interested in Ethereum and the merge, and a lot, like we could go into so many different directions here. But yeah, I actually wanted to hear from you. Are you, because would you say you're more of a Bitcoin person, Ethereum, or how do you think about the blockchain space?
Yeah, so I'm a Bitcoin maximalist.
Nice.
So I think Bitcoin's the way to go, and I think the centralization of Ethereum definitely worries me. And I know that there's a lot of developers and people working really hard to try to create the Web3, and I think the development aspect is very, I guess, on top of the Ethereum network, is very powerful. But I think that because it is so easy to develop on top of the Ethereum network, it's just making it a little bit harder for each of these tokens to come on. And I think a lot of the fees and everything like that are kind of increasing on Ethereum. So a lot of the way I view it is I view Bitcoin and Bitcoin as a whole as the mission to kind of bring um, easier rails of payments, and helping people, necessarily that are affected by inflation and other things, to have a more sound and hard money. So that's why I'm Bitcoin and Bitcoin only. It's maybe there's been better returns from Ethereum as of late. Um, but I think that the power behind Bitcoin is not just being able to build on top of it or anything. It's also the ability to transact, and I think there's a lot of headwind behind the Ethereum and blockchain space as well. But I think that there's a lot of development in these coins, and a lot of development in maybe some of the smaller ones, maybe not Ethereum exactly, but maybe some of the smaller ones that like you said earlier, you're hearing about a lot of these big rug pulls and things like that. So um, when people ask me about Bitcoin and crypto as a whole, I kind of just always sway them to Bitcoin and Bitcoin only, and to do your own research and look into why. And so honestly, I came into it for a little bit just trying to make some money, as everybody always does, whether it's investing in one thing or another. And I kind of stuck around in Bitcoin, and just keep adding to my Bitcoin position because of the sound money and the underlying technology that Bitcoin offers. So,
I love it. So, and this is also like kind of the understanding, because I um, totally agree with you. The Bitcoin that I've bought, I've never sold. Still a huge believer. Have gotten into some of the Ethereum and altcoin stuff, but understanding Bitcoin and people who stay at Bitcoin and Bitcoin only is super important to me. So one thing that I would ask you is, what is your vision, or what do you think Bitcoin will do about, like, so it's going to be the sound money, but I really love the idea of being able to have a programmable money. Is Bitcoin going to be able to have programmable capabilities because of layers on top, or will itself be able to do that? Or is it not important to do that because it's so important to have sound money? How do you think through whether or not that's important, and if it's possible, and that kind of thing?
yeah, so right now there's a layer two technology called the Lightning Network, which I think is extremely powerful for just transactions. So there's a lot of various things. I'm actually having a discussion in one of my group chats with some buddies that Strike just recently announced a partnership with Shopify. For those who don't know, to essentially allow you to pay over the Lightning Network, which essentially just lowers the extreme fees that when you swipe your credit card, whether it's Visa, Mastercard, American Express, or one of these other credit card companies, that company always takes a 3% fee on the swipe. So you pay a merchant $100, that Visa, Mastercard gets $3 from that transaction, and that happens every single transaction wherever. And that doesn't include maybe some point of sale place that charges a little bit extra here or there as well. um, and I think right now, especially with as inflation is kind of running rampant throughout the United States and globally as a whole. um, Businesses, especially small businesses, are going to try to find ways to save money, and one of those ways is I believe is the Lightning Network. Because I could send you, for example, $100 through Bitcoin, and you could essentially never touch Bitcoin. I could send $100 through a Strike app or through Cash App or something like that, and it'll go directly into your account over the Lightning Network. So it'll be transacted, and kind of Strike or another company will buy Bitcoin in the background, and then sell it and give you the US dollars straight back, and only charge a small amount of fee. Which is just maybe a couple sats or satoshis, as I call it, which are just little bits of Bitcoin, which in the end will be less than 1% of that. So I think as a whole, like, the Lightning Network is extremely powerful, and I think that that point of sale is vital for when it comes to the argument in the United States and other big countries. But at the same time, the United States has the most to lose when it comes to losing the global reserve currency. So we do have some countries now kind of coming along to Bitcoin. as a whole. And El Salvador has made it legal tender recently, and then today it was actually announced that the Central African Republic, I believe, is the name, announced it as legal tender as well. And so I think a lot of these smaller countries are going to start making it legal tender, and that'll just kind of force some of the bigger players to either have to interact with Bitcoin in some way, shape, or form, or just kind of keep on going and figuring it out. And I think what we've seen is that a lot of the regulation and people in charge, not to get political or anything, but like Jerome Powell and the Fed chairman, they're not elected officials. So at the end of the day, whether you're Biden, Trump, or whoever, Republican, Democratic, vote in a president or whoever, and they name people who kind of help your policy. So Jerome Powell, the Fed chairman, he was both under Trump and now under Biden. So whether you like him or not, he was under both sides of the coin too. So I think the way that people are kind of waking up to the inflationary times that we're in, that the manipulation of the money supply, how much money that has been quote unquote printed in the past couple years, whether you want to use COVID excuse or not, the money was printed at the end of the day, and everybody received, or a lot of people received, some sort of stimulus checks. Companies received these big loans, and at the end of the day, the small guy has to kind of deal with the inflation. And so I think having somewhat of the sound money principles, I think, is extremely powerful for especially the little guy. And whether the Bitcoin becomes legal tender in the United States or the US dollar becomes backed by Bitcoin, I think there's definitely some room to grow in that area. And I think that the overarching, money and the way we transact and things like that has a lot of room for change and improvement. And so that's, I guess, kind of my long-winded answer to all that. So I think yeah, there's some technology that's already been built that makes it more powerful, and I think that the sound money principles as a whole are just extremely valuable for everybody as a whole, but especially the middle to lower class.
Yeah, no, that's a great answer. And it's just funny because you'd think that, it is so clear that after printing $9 trillion and now we're seeing inflation, you'd think that like it'd be such an obvious trade to be buying gold like in 2020, 2021. And gold was actually down 4% that year because everyone was buying digital gold. It's just so clear that like so clear to maybe younger people like us who understand the benefits of Bitcoin over gold, and the sound money principles in the environment where money printing is just so huge, and inflation is a tax on mostly the poor, but it's a tax on everyone. And the way to avoid that is to have an uncorrelated outside of system asset, and Bitcoin totally represents that. So that, yeah, I'm totally with you there all the way.
Yeah, for sure. And I think more people are waking up to inflation and kind of taking a step back and realizing like, hey, whether it's a grocery bill or something along the lines, or going to the gas station, like, okay, I used to buy groceries for my family for $100, $200, and now it's $50 more. Why is that? Why are everything around me kind of going up? Even prices like Big Macs and other things that are generally looked at as very cheap are still increasing in price. And anecdotally here in Tampa, Florida, where I'm at, I go to local restaurants, or I try to a good amount, and a lot of times we'll see signs that behind the registers that say, this pricing has increased by X amount due to inflation. Just like, please be understanding. And then sometimes they even have it on like a chalkboard instead of just a sign. So you can tell they've erased it a little bit. And instead of $1, it's $2 or something like that. So I know a lot of these small businesses are hurting. And I hope for the restaurant's sake and my taste buds sake, selfishly, that they're able to stay open. And I think maybe that 3% fee that they pay to Visa, Mastercard, or whoever, could be a point where they save a little bit of money, and yeah, might be able to help save a few restaurants. And so yeah, I mean, I think overall, I'm a big believer in the Bitcoin space, and yeah, I definitely I get really passionate, but normally I try to keep this one to just stocks or everything like that. So this
Well,
audience might get a little bit side of that too.
yeah, I mean, I love asking questions about this. And actually, I got one more interesting one for you is that because this is, again, going to the whole overarching theme of understanding the other side. What would be something that you would see happening that would make you reevaluate Bitcoin? Is there anything like that? Just a little more context. So I would say I'm most excited about Ethereum right now, but seeing like Solana have it, solving a portion of the scalability problem by forfeiting even more security, makes me go, okay, so what would need me to change from saying like, oh, I think Ethereum is going to be the best chain, and then realize like, I got to be humble and think like maybe another chain could do something, and so I'm constantly trying to reassess and say, what do I see that would make me change my mind? And like for Ethereum, seeing Ethereum be used as money for NFTs and like on OpenSea was so validating. And then I start seeing, Solana kind of do it better or have lower transaction fees, and I go, okay, well, if this was the thing that made me so bullish on Ethereum, uh, do I need to take Solana seriously? So the question for you is what could you see out in the world that would make you say, okay, I need to reassess my Bitcoin only stance? Is there anything like that? Or do you think that philosophically uh, it's a slippery slope, and what is needed is to not get distracted, and Bitcoin does need to be the thing. Like you can solve all the problems that we want to solve on Bitcoin. We just need to not get distracted. Like, is it kind of one of those things, or is there something that could happen where you'd say, all right, let me actually buy some of a different crypto asset?
Yeah, so I think as far as other crypto assets go, it's going to be pretty difficult for me to be convinced of having anything like that, because my background is in engineering, and I wouldn't say I'm a developer or an expert coder or anything, but I know enough to know that a blockchain at the end of the day is kind of an inefficient way to transact, but it's built to be that way. So you can, really understand it and track, and it's not really supposed to be like, this revolutionary technology. Like blockchains have been around for a while, and I think at the end of the day, a lot of things that are being developed right now don't really need to be on a blockchain. I think it's making it a little bit more difficult, and it's making the transactions a little bit slower. And yeah, I just think it'll be a tough sell for me to get onto any other, I guess, crypto asset, just kind of from my viewpoint there. And I also truly believe in the philosophical stance of Bitcoin, and I think that at the end of the day, if something needs to be developed, it can be developed on the Bitcoin network to kind of help. And I think everything that's could be useful on a blockchain, as far as like for transactions or anything like that, can be built on the Bitcoin network. And then I guess a bear argument that I could think of, for Bitcoin as a whole, um, although I'm very bullish, I would hate to see it become somewhat centralized. Um, so a lot of people kind of make the argument that Michael Saylor and MicroStrategy is buying up a lot, but at the end of the day, I think he has a little bit over 4,000 Bitcoin, which is quite a bit in U.S. dollar value. But at the end of the day, 19 million have been minted already or mined. Um, But earlier last year, I believe, I don't remember the exact time, but we saw China ban Bitcoin mining, and at that time, there was a massive amount of the Bitcoin mining hash rate that was in China. I believe it was pretty close to almost half. And that was kind of the biggest bear argument that I could see at that time, but China banning Bitcoin mining, I believe, actually helped the decentralization. Um, so the only thing, I guess I could see is like maybe a bunch of miners decide to move to a perceived more safe geopolitical site, like maybe the United States or Canada or somewhere, along this side. But at the end of the day, I think. That kind of helped show that although countries are trying to ban it or regulate it or what, Bitcoin is so decentralized that it can't really be stopped. So we saw a big dip in the price initially and in the hash rate, but like I said, at the end of the day, I think that kind of helped. And that was kind of my last big bear argument that I was really worried about when I first was investing in Bitcoin. But now it's just, I think it's just kind of been through the ringer. And I think, part of my newsletter that I have is the state of Bitcoin. And at the bottom, I link I think it's like 7 or 8, like just general FUD arguments that you see. And, one of them's like the ESG narrative that's kind of going around right now. And others are like governments regulating it and kind of putting a halt to it. So I kind of went through that exercise as to why is or what could happen, and what do people say could happen that could be the end to Bitcoin. And I kind of went through and really took a dive into each one of those to make sure for myself that although it's perceived as really volatile and risky and things like that, I think like at the end of the day, it's a very strong asset and it has a lot of power behind it. And Yeah, so it'll be hard to kind of convince me the other way to go to any other crypto or move away from Bitcoin only, I think right now.
So what I'm hearing though is that if Bitcoin did meaningfully move to a centralized, like if you're like, all right, it's getting very centralized now, that would be a cause for concern. That doesn't. It looks like it's getting more. It's moving in the right direction. It's becoming more decentralized. But let's say China didn't ban Bitcoin and in fact tried to monopolize the mining, and like 90% of mining was happening in China. That's a situation where you would say, hey, the whole reason I'm bullish on Bitcoin, the whole reason I believe in its values is that decentralization piece. If that was to get co-opted, then that would be a situation where you'd go, let me reevaluate. Is that valid?
Yeah, definitely. Yeah, I think like the decentralization aspect of it is huge. And I think, uh, yeah, exactly. Just like you're saying, if for some reason all the miners move to one place, um, but I think at the end of the day too, it's becoming more decentralized as like, we're having bigger companies like Square and Block get into Square/Block, after the name change. They're getting into Bitcoin mining and trying to build at home Bitcoin miners. So it would be tough to see like a company or a country that kind of gets regulated, like kind of centralize all that mining power and all the Bitcoin hash rate. But yeah, I think
Yeah.
if that were to happen, yeah, that would be my bear case for
The good
for
news
Bitcoin.
is that it's becoming less and less likely, and that reality is becoming very unlikely. So that's
Yeah,
good. For
yeah,
for me in Ethereum, I'd say that the execution risk of the merge. I think that if we saw something going really wrong there with like hacks or security or issuance going crazy, or there's just so much execution risk in the transition that they're trying to do from proof of work to proof of stake. Like if I were to see that get really blown up and have there be some huge bugs in the code, or centralization to really increase because proof of stake has a lot of concerns about that, I would also say I'd reevaluate Ethereum. So yeah, there's me kind of answering my own question about what could I see happen where I would kind of lose faith and move away from it.
I gotcha. Cool. Well, yeah. All right. Enough about all this blockchain and Bitcoin stuff. Let's get into, I guess, some people and like how you view the market and maybe some, I guess, market or investor type trends. So, do you view, I guess, or have you looked into any kind of patterns, whether it comes to, maybe gender specific men and women, or race or age cohorts, whether it's millennials versus Gen Z or what have you, how they kind of view the markets and invest?
Yeah, so I think it's really interesting how men and women invest differently. Women actually tend to invest more conservatively. I think the stat is that the average woman keeps 68% of her portfolio in cash and cash equivalents, compared to 59% for the average man's portfolio, which I think is amazing because like I checked mine and I was like 6% cash, and so I'm like not even close to what the average guy is, and so that just shows you like there's so much deviation. But anyway, I think that like when you're holding all the other variables and controlling just for gender, that's a pretty substantial difference in cash weighting, which is just so interesting. Research also kind of shows that women are less impulsive investors than men, and reports show that women make fewer trades and even log into their investment accounts less often than men. And that ends up contributing to them having superior returns. The stat that I was seeing that it was 1% better. And I was actually trying to figure out like, okay, is this study saying 1% better per year or just over the lifetime? Because that's a very different compounding. But the research that I've seen is in general, there's it sounds like a slight difference where women are outperforming men, and one of the possible reasons for that is the activity. I think that's important because you know I get very intellectually interested in the markets, and I have a lot of fun learning, and it's just so funny to think that that costs me money possibly because it leads me to a behavior of more active trading that ends up actually hurting my returns over the long period of time. And that is a area of cognitive dissonance for me that I think I will be thinking about for my entire life. Is that I tend to think that lifelong learning and being interested in the markets is good because as an intellectual pursuit, I think the connection is like it will help you with your returns over the long run, or something about that is wholesome and good. But if it hurts your returns, then maybe the thing that you should take away from that is actually like to be less into the markets. So that was just one interesting thing I wanted to kind of chat about. Also, just because women are less interested in the markets as a whole, like as a community manager, I'm very interested in understanding why so few women are financial content creators, and why there's less the type of discussion that you see women having about investing is much more about personal finance and broad like savings tips and tax tips, and then the men are all like, what should I buy in, what stock ticker, like let me, and it's very aggressive and competitive, and it's just a totally different feel and vibe. And so again, I when I see two different communities acting in different ways, my inclination is like, how do we bring these together, and how can you learn from both? And so I want there to be uh, more of a conversation between these investing styles and what is the best way to be, and can we find that out through discussion? And I don't see a lot of discussion about that. I think it's partly because it's a hot button. It's a touchy topic. Gender is tough to speak about because it gets very yeah, it's tough to talk about, right? So uh, when it comes to those types of conversations, I'm always thinking about like, how can we have that discussion where we're not attacking each other and we're just simply trying to learn about what the opposite side is. So that's another theme that I get very interested in.
Yeah, for sure. And I guess your experience and your position as community manager kind of is along those lines of those themes, which makes sense. And yeah, I mean, it's interesting that there is such drastic difference, but being in the content creation space, I do notice that, it's just mostly all men, which, I mean, it's good and bad. Yeah, it's easier to, I guess, for me to reach out to not feel, I guess, somebody feels some type of way or feels weird or attacked or something like that when it's that awkward conversation between the different sexes or genders. But Yeah, I mean, I think that there's definitely room for, maybe somebody with a female voice to come in and, give some discussions. And I know it'll be taken a little bit differently because I just, from when I talk to my sisters about investing, they take it a little bit differently than when my mom tells them, that they should get invested too. So I think that that conversation can definitely be powerful. And I think, just having open forum discussions like we've been saying is just so valuable. So I hope we see some more women content creators get out there and encourage other females to get invested.
And there are a lot of them, and there are very very good ones. And so there's no painting with a broad brush, right? There's people like Beth Kindig who just trounce the intellectual capacity of like a lot of like men. And so yeah, but yeah, I personally would love to see more women investors and content creators. But it's also possible that my own personal bubble just keeps me from that like I'm not seeing a whole section of people. And so I'm looking into finding more and elevating more voices like that, and want to see my own blind spots and get more exposed to lots of different viewpoints. So yeah, looking forward to hopefully seeing a lot more female investors getting a lot more airtime in a lot of different platforms.
Yeah, for sure. And I'm sure there's a lot of out there that definitely a whole lot smarter and know a lot more about the markets than I do as well. So that's great. Now, we kind of talked a little bit about your Ethereum position earlier, but let's get into where you've been right on other companies or other investments. So, have you been, I guess, holding any others that you think that, I definitely nailed this one on the head, whether it's a stock or another crypto or anything along those lines?
Yeah, so Tesla 2019 would be one that I got right. That was a fun one because it was very much like a counter positioning psychological investment. So at the time, there was a lot of worry about whether or not Tesla would go out of business, and there were just a lot of bears talking about the demise of Tesla and how it's just got no future. And so from viewing kind of like how many Teslas I was seeing on the road and looking at the financials, which weren't great, like there was reason to be concerned, uh, and then comparing that with the like it was the right thing, it was the broadly held opinion that Tesla was going out of business. And whenever I see lots of really smart people talk about the same thing in the same way, I get skeptical. And sometimes I even get intimidated because a lot, smart people are smart and their theses sound smart. But when everyone's saying kind of the same thing, I tend to think about the risk reward of going in the opposite direction. And so took a pretty big position in Tesla in 2019, and and it like 10x, right, from 2019 to 2020. It's come down a lot since, but it was like the right trade. And I think the takeaway there is you can be really smart and you can be really right and still not have the right trade, because you didn't realize that if everyone is on the side of that trade, then you're probably going with the herd, and the money is actually going to be made in the opposite direction. Uh, yeah, so that was one that went really well.
That's awesome. Yeah, like that's great. And I think more and more people are kind of jumping on the Tesla bandwagon now. So, hopefully it still has some success. And I am a believer in Elon, and I think he's going to do great things. And the diversification of the business too is just great. So I think as a whole, some might view it as just a car company, but it's definitely got a lot of other aspects of this business that makes it a little bit more diversified. And I always like those big businesses that have various sources of revenue, because it seems like, all right, if one sector of the business fails, it's not as big of a deal. So, yeah, great. Now, on the flip side, where have you been wrong? And if you've been wrong on any of them, on any stock recently, are you still holding on to them, or how do you go about deciding when to sell a stock or a position?
Definitely. There's been a lot of those examples, especially in the last 6 months. I think everything since November, a lot of my tech bets have been down. Three big examples that are Roku, DocuSign, and Teladoc. Roku specifically hurts a lot because I had written a long memo on Common Stock about them, I think in like July of last year. And I'm still holding on, and they're just down. So, like, probably, so they're a lot, probably 50 or 60%. The idea with Roku is kind of this move away from cable and to streaming, and the tailwinds of the ability for Roku to be a operating system for the TV. And I still think that that's the direction that we're moving in. I think that it just makes so much more sense for advertisers, for content, for platforms to be digital and be streaming as opposed to being analog and cable. Like, that's just still a broad theme. I think is that's going to be happening. I've been wrong mostly because of the macro environment repricing a lot of tech names and just stocks in general. And I'm still trying to reevaluate, like with Netflix losing subscribers for the first time in like a decade, actually being net negative subscriber ads. Is there still as much of a tailwind as I thought? And so I'm obviously reevaluating and thinking about, is it time to let go of that position? But so far, still holding on because I think that the big repricing is mostly a macro thing. And if we were to see, something out of our control, like, the way that the Fed, it would be tough to see them doing, more money printing. And I'm not a fan of that. I wouldn't want them to do that. But there are big macro things that could happen that would put us right back to where we were in mid last year. And I am not super excited about getting rid of a position that's only been affected by macro when there could be a snapback. But as is investing, there's always a lot of uncertainty. With DocuSign and Teladoc, the story is pretty similar as far as the repricing. There's more concern with Teladoc that the value add that they give as a way to connect to doctors online, is that even really a defensible position? My personal view is the Livongo side of that business, when they merge, that's the more exciting part, and watching if that's going to take more of the value proposition and the narrative in the future. So far, that's not been the case. And then DocuSign also, I think, is one where it's just so clear to me, at least, that contracts are moving more online and digital, and that's just going to be kind of the way the future is. That's got like a long-term trend and tailwind. But the timing of buying that could have been wrong. The conviction that I've got in how quickly we'll move to a world where contracts are only done digitally might have been wrong. And so far been super down on those, and we'll see. It's always exciting to see what the future will hold. So we'll be watching and seeing how they do.
Yeah, for sure. I definitely think we're in for some interesting times ahead, as you kind of mentioned, and it's a lot of things that'll affect stock market and just general sectors too as a whole. Kind of pointing to inflation, whether Fed's gonna raise or lower rates, or maybe print some more money. Who knows? At this point, it seems like maybe they're trending in not doing that direction of printing more money, but crazier things have happened, and it's definitely not out of the question for sure. So, yeah, Nathan, I think we've ran a little longer than an hour now, but I appreciate all your time. Why don't you sign us off and tell people where to find you, and where to find out more information about you and everything you got going on?
Yep. So you can find me on Common Stock at Nathan Worden. Definitely give the platform a look. Go check it out. check out the awesome research that's happening on there, and the transparent sharing and the thoughtfulness and the collaborative discussion. Check out Common Stock. I'm on there as at Nathan Worden, and definitely follow. I think it's Green Candle Lit. I mean, you should give your handle too, but another great account to follow.
It's yeah, at Green Candle IT. So both that on Common Stock and on Twitter to make it easier for everybody. But yeah, definitely follow me on there and join the platform and see a lot of people sharing their ideas back and forth. So Nathan, thanks again for your time, and thanks for joining me here. And yeah, I hope you have a great rest of your day.
Thanks so much. It's been an awesome time.
Awesome.